everybody, welcome once again to your channel Krishna Singhdeo. Today we are meeting here for class 11 student, and the chapter which we had started in the previous class was of accounting equation. Yes, we had learned few basic concepts regarding accounting equation. Today we will proceed with the topic. So let's get started, students. In the previous class, we had learned what is accounting equation, and we had also seen some of the topics which are here on the screen. Okay, so we had seen how to pass accounting equation in the transaction when we have been given that some businesses started with cash. Then we had seen the purchase related transaction, the posting of it in the accounting equation, treatment of it in accounting equation, sales related transaction, sales for cash, sales for credit, and purchase for credit. So these few things we had dealt. Today let us start our class with writing few important points about the accounting equation, and I will strongly suggest all of you to sit with this, to watch this video with pen and paper in your hand, because this is an educational video, students, and you can get the maximum benefit of it only when you are involved in watching it. If you are just sitting or lying down and watching, this video is not going to be of any help for you. So you have to be involved and engage yourself completely, and the best way to do is to write along with me. So let's get started. We are writing some important points about accounting equation. So first of all, each transaction will have two impacts. Okay, each transaction will have two impact. Means what? Will have two impacts or effects. Means I can say that either each side of equation will be affected. Means what is the accounting equation? Asset is equal to capital plus liability. So either there is going to be increase and decrease in the asset, or there is going to be increase in the asset and decrease in the liability, or any kind of other combination is possible. So we will write either asset, capital, or liabilities will increase or decrease. Means if I write asset is equal to capital plus liability, any this kind of combination is possible, or they can be plus over here, 0 over here, or there can be 1 plus over here, 1 minus over here, 0 over here, or there can be 1 plus over here, 1 plus over here, and 0 over here. Anything like this can be there in the accounting equation. So each transaction is going to result in at least two effects. There are places where there is going to be effect at three places also, which we will deal. Now third point is that after each transaction, we will find new equation. So in the last class I had not done this practice because that was the very initial part where I was telling you how to pass the entries for starting the business, how to pass the entries for purchasing goods for cash, and how to pass the entries for purchasing goods on credit and sales on the credit basis and cash basis. Now today when we will solve the questions, we will see how you will pass the entries, and after each entry you are going to find out the new accounting equation, and obviously the new accounting equation should also tally. Okay, so let's learn few new concepts first, then we will do a question where we are going to take into consideration all these concepts. Means we will see the impact, we will see the new equation also. So in the previous class we had done starting of business with cash, we had also done sale concept, we have done purchase concept. Now today let us understand loan. So whenever a loan is being taken, a loan can be taken from a person, a loan can be taken from an institution like bank and other financial institution. So what happens? For example, we have taken bank loan. So if we are taking bank loan, just think about the two impacts of it. If we are taking bank loan, our bank balance is going to increase, means our asset is going to increase. This is going to be one impact. On the other hand, bank loan is what? Bank loan is a liability. Liability is also going to increase. So these are the two impacts of this particular transaction. Suppose we have not taken bank loan, we have taken loan from some other person. Let's say loan from Rohan. So here obviously cash is going to increase, cash or bank, however the loan is being given, cash is going to increase, or we can say asset is going to increase. And on the other hand, there is loan from Rohan, which is again a liability, is going to increase. So this liability will be increased. Understood? So whenever there is a transaction relating to loan, it will have two impact. On the one hand, the asset is going to increase, either cash or bank balance. On the other hand, the liability is going to increase. Fine. Now let us understand one more thing, one more transaction, which is purchase of any asset. Purchase of, it can be fixed asset, purchase of, let's say, computer or machinery, or it can be a building or any other fixed asset. Okay, any fixed asset if we have purchased, first thing which we have to understand is this is not a purchase. Yes, many students make this mistake that they write it under purchase account. Purchase, when I was teaching you basic accounting terminology, I had taught you students that under this purchases, only purchase of goods can come. Purchase of furniture, purchase of asset, etc. is not a purchase because it is a capital expenditure. It is acquisition of fixed asset. So the name of asset has to come. For example, we have bought computer. So we are going to write computer account debit. Sorry, it's not journal entry. Computer account will be increased. So asset will be increased, or I can write down the name of computer in my accounting equation. It will be added. If we have bought it on the cash basis, so obviously our another asset is going to decrease. If we have bought it on credit, okay, so computer on cash, in this case we are affecting two accounts. Our asset is increasing and another asset is decreasing. For example, computer is bought on credit basis from XYZ vendor. So computer on credit, so again we will have an asset increasing, computer will be added. On the other hand, liability means the creditor is going to increase. So creditor plus here we will write creditor for computer, like this. So again, here are two impacts of this transaction. One, asset is increasing, and on the other hand, liability is increasing if it is bought on the credit basis, and if it is bought on the cash basis, the liability, one asset is increasing and another asset is decreasing. The asset which is increasing is the fixed asset which we have acquired, and asset which is decreasing either cash or bank. So like this you have to pass the entries for it. Now you have to accommodate in accounting equation. I'm going on saying entries because in my live classes I'm teaching journal entries. Okay, now let's take an example where I will write down all the aspects what we have learned till now. So let's write along with me. So let's take an example. Whatever name you want to write, you write. I'm writing X started business. X started business with cash. Rupees 5 lakh. Then I'm writing the second transaction. Purchased goods worth rupees 50,000 for cash. Third transaction I'm writing, took bank loan of rupees 75,000. Then number 4 transaction I'm writing, sold goods to Y for rupees, let's say 30,000. And last transaction I'm writing, paid to, this I have not taught you till now, but I'm just writing, paid to creditors rupees 50,000. Okay, it is related to transaction number 2. Now see, this is a transaction. These are number of transactions given to us in front of us, and we have to make an accounting equation. Now today what we are learning, how to incorporate all of this in accounting equation. So always and always when you attempt the question of accounting equation, you have to read the question in advance. So, and when you're reading, you just make a list of all assets and all liabilities which you have to incorporate in your accounting equation. So the first one is X started business with cash. So I have noted down here is cash is going to come and capital is going to come, because whenever business is being started, on one hand our asset is coming and on other hand our liability is being generated, which is internal liability or owner's capital. Second transaction is purchase of goods worth rupees 50,000 for cash. So cash is already there. Okay, it's already there. And another asset which will come is stock or inventory, whatever you want, you can write. So we have cash and capital and stock till now. Took bank loan. I have forgot to write over here loan. So bank loan of rupees. Bank loan. So bank was not there and bank loan has come a new liability. Why I have written bank, not cash? Because see, if we are taking a loan from bank, obviously bank will give it to us in our account. Okay, bank will not come home and give us cash. So obviously when we are taking a bank loan, it has to go in the bank account. Fourth one, sold goods to Y for rupees 30,000. So stock is already there. Stock, and Y is who? Y is our debtor. So debtors account will be opened. Okay, purchase goods worth rupees 50,000. Okay, I sold goods, paid to creditors 50,000. Creditors, I will have to change this over here. Purchase goods of rupees 50,000 from, I'll just write someone's name, from A. So A's account, A is our debtor, has to be written. So in second entry it will not be cash, it will be A. A's account means our debtor. A is A is our creditor, sorry. A is our creditor. Debtor was Y. So these number of transactions are there. Last transaction is payment to creditor. So creditor will be deducted and cash will also be deducted. So we have to figure out how many assets are going to there. So if I write under asset, I have number 1 cash, I have debtor, I have bank. These 3 assets are going to be there. Okay, and if I talk about the liability side, under liability side I have creditor whose name is A, and I have bank loan also as one of my liability, and capital will always be there. So that liability, it does not have any further bifurcation. So I know now under asset account I have to make 3 columns, and under liability account I have to make 2 columns, creditors and bank loan. Okay, so before reading the question, before doing the question, you have to read it and carefully note down that how many columns you have to make, because later on it is not possible to incorporate any question and any column and your whole question is going to go wrong. So always do advanced reading and take time in reading and marking this. So now I am making accounting equation. I am writing assets is equal to capital plus liability. You have to maintain a proper gap when you are writing it so that you can incorporate the number of columns we want. Okay, so under assets we have seen we are incorporating 3 columns: cash plus debtors plus inventory or stock. Oh, I forgot to, cash plus debtors plus stock was also there, plus bank was also there, and stock. So there are 4 columns altogether. equals to, under capital nothing is going to come, so I will just write the capital towards the left, plus under liability I am going to write two things, creditors and bank loan. I hope you understood. And some teachers tell and some books also tell that you have to write the transaction also. So if you are being told that you have to write the transaction also, you can make one more column on the left hand side where you will write down the transaction. I usually do not prefer writing down the transaction, but yes, if it is being told to you by your teachers, please incorporate one more column where you will be writing the transaction. So transaction is nothing, you will have to copy the same thing under transaction. Okay, let's read what is first transaction. The first transaction is saying X started business with cash rupees 5 lakh rupees. So whenever the business is started with cash, what is going to happening? The cash account will be added with 5 lakh rupees, whereas debtor account is nothing, bank account is nothing, and stock at this point is nothing. Who has introduced this cash? Obviously the owner. So the owner's liability or the capital has increased. So this is going to be like this. Okay, after first equation, after first transaction, we do not make new equation, but after second onwards, every time we will have to make the new equation. So here I can just simply put number 1 as my serial number. Now I will go back to the question and read the second transaction. The second transaction under the question is given, purchase goods worth rupees 50,000 from A. So we have bought goods. So A is who? A is our creditor. 50,000 I am going to add over here, and over here nothing, and 50,000 will come under inventory also. I have bought goods from A, so 50,000 is going to come over here. Okay, now after this I am going to find out my new equation, and what is my new equation? Nothing but the total of this. So new equation is going to be 5 lakh plus 50,000. So on my asset side it is coming 5 lakh 50,000, and on my liabilities and capital side also it is coming 5 lakh 50,000. I hope you understood this. Now let us go for the third transaction. Means after every transaction you are making a new equation and checking whether you are going in the right direction or no. Here my total is coming 5 lakh 50 and 5 lakh 50 on both the side. For example, my total would have come 5 lakh on one side and 5 lakh 50,000 on the other side. Then obviously I would have caught myself that yes, I'm making some mistake somewhere, and I would have gone back and checked that whether I have done something wrong or no. And definitely I would have done something wrong either in writing part or in the concept part. Otherwise my equation should always tally. Okay, so let's go for the next one. The next transaction is took bank loan of rupees 75,000. So whenever we are taking a bank loan, it should be added in the bank account. So 75,000 will be added to bank, and rest of the assets will remain unaffected. Your capital is going to be unaffected. Creditors are also going to be unaffected, but 75,000 will be added to your liability, which is bank loan. Now again, after each equation, after each transaction, I said that we will have to make new equation. So after third transaction also we will make new equation where my cash is unaffected. So cash will remain as 5 lakh only. Debtor account is not yet open. It will remain as it is. 75,000 will come under bank and 50,000 will come under stock. Whereas my capital is going to be 5 lakh rupees. My creditors are going to be 50,000 rupees, and my bank loan is going to be 75,000 rupees. So the total is coming 6 lakh 25 on both the side. You can total and see 5 lakh plus 50,000 is 550. 550 plus 75 is 6 lakh 25,000 on the asset side, and on the liability side also we are getting the same total. So each time we have to see this new equation is tallying or no. Now let us go to the last transaction. There are two more transactions. Sold goods to Y for rupees 30,000 means we are making a debtor, credit sales, debtor. So sold goods, nothing is happening to cash. Yes, in debtors we are adding 30,000 now. Bank, nothing is happening, but we have to minus from the inventory 30,000. Okay, it will not have any impact on the liability and capital. So after the fourth transaction, we will find out again a new equation. So new equation is what? New equation is your cash is unaffected after this transaction, which is 5 lakh rupees. You have got new thing, debtors of 30,000 rupees. 75,000 will remain as it is, and your stock has reduced now to 20,000 rupees. Whereas there is no impact of this transaction on the liability and capital. Everything is same as it is over here as it was before the fourth transaction. Now if I look at this transaction, what is the impact? Because same 30,000 was added into one asset and 30,000 was deducted from another asset, the impact has nullified on the asset side and the total is coming same as 6,25,000, which was before the fourth transaction. Okay, I hope students you are getting it and you are making it along with me. If not, please stop watching the video right now, pause it, go get your copy, notebook and your pen and start writing, because before without writing these transactions, it will be difficult for you to understand. Okay, now we have reached to the last transaction of this question. The last transaction of this question says paid to creditors rupees 50,000. So we had bought from creditors goods worth rupees 50,000. Now we are making the payment to creditors. So whenever you are making the payment to creditors, obviously your cash is going to be deducted. There won't be any effect on the other assets, and there won't be any effect on the capital also, but yes, your creditors are going to be deducted 50,000 and your bank loan will also remain unchanged. Okay, I have written your 5 lakh. I should have just put a dash over here. Now I'm reaching to my final equation. This is my final equation and which should also tally. So this is 4,50,000. My cash has become 4,50,000 now. My debtors are 30,000. My 75,000 was what? I don't remember. 75,000 was back, plus 20,000 is stock. So if I look at this equation, this is 5,75,000 and here 5 lakh is my asset, capital, sorry, and my creditors have become nil now and 75,000 here. So both the side, my equation is tallying with 5,75,000 and 5,75,000. Okay, so final equation is tallying. So always you have to make sure that your equations are tallying after each transaction. Okay, now let us understand few more transactions in today's class, that is related to the transactions where you have to pay some expenses and you are earning some income. So transactions related to expenses and income, transactions related to expenses and income. First we'll write down about this something. See, if any income or profit is being generated here in accounting equation, we will always have to make changes in the respective asset and we will have to make the changes in the capital. Because what is capital? Capital is representing owner's liability towards the owner, or we call also owner's equity. So if any profit is happening, the owner's equity or the owner's liability is increasing, the capital is increasing. If any expense is being incurred or if there is any loss, then his capital is decreasing. So along with cash, if the payment is done in cash or the income is received in cash, you have to make the changes in cash, you have to do the plus or minus in cash, and along with this there won't be any separate column for any expense or income. You will make the changes just in capital. So remember this thing, for any expense and any income there is not going to be a separate column until unless it is prepaid and outstanding. What is prepaid and outstanding we will understand in the coming classes. So just make sure we'll write down these things, that any income or profit is added to capital and cash. Okay, provided it is received in cash. I'll write if received in cash. Secondly, any expense or loss is deducted from capital and cash if paid in cash. Okay, let's do it with the help of example. For example, salary rupees 5,000 paid. So how I'm going to incorporate this in my accounting equation? You will write something like this. This is my accounting equation. Assets is equal to capital plus liability. Under assets, I will write cash, and here I am not specifying anything. So under cash, I am going to deduct 5,000 rupees because when I pay salary, my cash balance will reduce. Similarly, this is an expense, so 5,000 will reduce from here also. Okay, so this is the impact of it. It can be salary. Let's take one more example. Let's say that electricity bill paid rupees 3,000. So again, you are going to deduct it from cash, and your cash it is, and you are going to deduct it from capital also. Okay, let's say 3,000 rupees. So 3,000 rupees and 3,000 rupees will be deducted from here. So both the side you are deducting. Now, let's say we have earned something. So if I have received a commission of rupees 5,000. So how I'm going to write? My accounting equation is going to remain same. Under assets, I will write cash. I will add 5,000 into this cash. Also, I will add 5,000 rupees into capital, and liability will remain as it is, no impact on the liability. Let's say we have earned rent. Rent received. Rent is also an income. Rent received. What is rent received? Rent received is, again it will come in cash, and under capital and liability, cash will be added 5,000 rupees, and similarly rent received, I have not written the amount, let's say 5,000. So it will be added to capital also. Understood? Now we have reached to very important part, a transaction which will have impact at three places. Means now we will see a transaction where we will see the sale of goods or liability, a sale of goods on profit or loss. So I'm writing a transaction. I will request you all to stop writing if you are writing for time being and understand it properly. Then you can pause the video and write. So the transaction is like this: sold goods costing rupees 8,000 for rupees 10,000. Since the name of the person to whom the goods are being sold is not given, so the general assumption is going to be this, that these goods are sold on the cash basis. Now, how are we going to deal with it? Obviously, on my asset side, I will have to take into account two things, that is cash and inventory. Inventory or stock, that is one of the same thing, and here nothing specified. So when we sell goods, what is happening? From goods, how much I am going to deduct? I am going to deduct 8,000 because what is my cost, that much I have to deduct. Whereas if I add over here, I will have to add 10,000 because the 10,000 amount has come to me from the person to whom I have sold goods. Now the question is that what should I write under capital? Okay, or what should I write under liability? Now you will ask me, ma'am, you have taught us the transactions of cash sales. There we did not write anything under cash. You are right. But if you see the transaction very closely, what happens if we have to add and deduct the amount on the one side of the equation only? Then these amounts should be same, whereas these amounts are not same. Let me write over here. Suppose my cash was 50,000 rupees. and my inventory was 50,000 earlier, and let's say my capital was 1 lakh rupees. This just for the understanding part I'm writing over here. So earlier my equation was tallying. Okay, earlier my equation was tallying 1 lakh rupees on the asset side and 1 lakh rupees on the liability side. Now after doing this, if I do the total over here, what is happening? This has become 60,000 rupees and this has become 42,000 rupees. Okay, whereas it is nothing, it is 1 lakh rupees only, means my accounting equation is not tallying. On the asset side, I am getting the total of 1 lakh 2,000, and on the liability side, I am getting a liability and capital side, I am getting only 1 lakh rupees. So there is a difference of 2,000 rupees. So where should I incorporate it? Here only we have to understand it very carefully that we have sold goods, but the cost and selling price both were not same. The cost was lesser and the goods are being sold at a profit of rupees 2,000. So we will have to incorporate this profit over here. So I'll write it like this: 10,000 over here, deduction of cost only. Always from the stock you will deduct the amount, what is the amount of cost, and you will add the difference, either it is loss or it is profit, has to be added or deducted from here. So in case of this transaction there is a profit. Now if I write my accounting equation is going to tally, it is coming 1 lakh 2,000 rupees over here, and here also 1 lakh 2,000 rupees. Okay, so whenever there is this kind of transaction where you have been given selling price differently and you have been given cost differently, then you will have to make sure that you are writing at 3 different places. One, you will deduct the cost from the stock or inventory. Whatever amount you are receiving in cash, you will be writing it, the selling price you will be writing under the cash account, and the difference, which is your profit, will go to the capital. Okay, now let's do one more thing. One more example I am going to take. For example, goods costing rupees 15,000 sold to Sumit for rupees 20,000. Now here what happened? Again you have earned a profit, and how much is the amount of profit? 5,000 rupees is the amount of profit. Now you must have understood by now, I will not write cash this time because these goods are sold on a credit basis. So under assets, and I have debtor because I have sold these goods, debtors and inventory. And on the liability side, as it is cash, capital and liability. So debtor will be increasing by 20,000 rupees. Why? Because the selling price of the good, I will take it from the debtor later on. But inventory, if I talk about, the inventory has gone of 15,000 only. So minus 15,000 from inventory. Now again my accounting equation is not tallying because 20,000 plus and 15,000 minus 5,000's difference is coming. So where should this 5,000 go? This 5,000 is profit and it should be added over here. Understood? So like this you are going to take care of the transaction which is related to profit. Now let us do one more transaction where we will see that goods are being sold on loss. So if my goods costing 17,000 sold for rupees 15,000, no name of debtor is written, means these goods are sold for cash. Now why you will sell the goods at a lesser price? Maybe because the competitors have reduced the price, so you are bound to reduce to stay in the market, or the goods have become defaulty and they have become obsolete, or XYZ, any reason. Because of that you're bound to sell the goods at a lesser price. So now what will be the impact of this? I'll write the accounting equation. From cash, how much I'm going to add? In cash I'm going to add only 15,000 rupees, whereas from inventory I'm going to deduct 17,000 rupees. So there's a difference of 2,000 rupees, and this time this difference is a loss, so this will be deducted from capital. Okay, loss is to be deducted from capital, profit has to be added into the capital. So This way we deal with any kind of loss. Recap once again, what do we do with the profit? If there is a profit, first of all understand where there is cost different and selling price different. Always you have to make sure that you are putting it at three places. What are these three places? These three places will be one, capital account, two, inventory, and third can be cash or debtor. Okay, if it is sales, it can be cash or debtors. Now if the goods are being sold on profit, then profit amount is going to be added into capital and the cost of the goods will be deducted from your inventory, and whatever is the amount of sales, it will either go to cash or it will go to debtors. It will be added to cash or it will be added to debtors. In case you have sold goods on loss, so in that case, the cost of inventory will be deducted from inventory or stock. The selling price will be added to cash or debtors, and the difference, which is loss in this case, will be deducted from the capital. So this way you are going to make the treatment for this. I hope students you understood this concept. Today we have done some very important topics in the class. So revise it properly and try to make your own questions or refer the book, and from there you try to solve the questions. We will meet once again in the coming class, and yes, do not forget to subscribe the channel if you have not yet subscribed. Somebody has written a very nice comment that ma'am, you deserve more views. Yes, I understand there is a lot of hard work in that, but the views come only when people like you appreciate who are watching our video and share it with others. So if you really like the work which I am doing, please do not hesitate in subscribing the channel, liking it and sharing it with the others also, so that I also feel motivated. We will meet in the next class. Till then, bye. Have a great day.